Mortgage forbearance programs are coming to an end. So, does that mean that we're going to see an influx of foreclosure properties? Hi, this is Andrew with the Andrew Smith team at eXp Realty. And in this video today, I'm going to give you 4 reasons why the end of the mortgage forbearances are not, again, not going to lead to a wave of foreclosures. And you may have seen on the news or read an article recently that the forbearance program is coming to an end. It's been extended several times and it's now reached a point where it's coming to an end. And there were dire predictions a year ago when all of the actually over a year ago now when all of this started to happen, that with all of these forbearances, that was just the tip of the iceberg, and that we're going to be in for a housing crisis similar to what we saw 15 years ago. And that's simply just not the case. I'm going to explain why here. All right, so reason number one: there's fewer homeowners in trouble. So simple math on this side of it. So when you go back to the housing market crash, about 9.3 million homeowners lost their home to foreclosure or short sale or deed in lieu, meaning they just gave the home back to the bank. And as the stay-at-home orders and everything that took place a year ago took place, there were some out there, some industry observers that said up to 30% of all mortgage holders will end up in forbearance, and a large number of those will end up in foreclosure. So there was this idea that the housing market was in trouble. And as you've probably noticed, the housing market is definitely not in trouble. But is that going to be the case going forward? And again, it is. So again, it was projected that up to 30% of all mortgages would go into forbearance. Only 8.5% actually did. So substantially lower than what was expected. And of those 8.5% that actually did, only 3.5% remain in forbearance as of last week. So what does that mean in terms of numbers? So 1.86 million homes. All right. So 1.86 million mortgages are still in forbearance as of last week. Now, that's still a large number. Don't get me wrong, but nowhere near the 9.3 million that we saw during the housing crash. All right. So, reason number two: most of those 1.86 million that are still in forbearance have enough equity to sell. So it's estimated right now that about 87% of those homes have at least 10% equity. Now, 10% equity is important. It's kind of considered the magic number in this case. And the reason for that is if you've got 10% equity, you have enough money to list your home for sale, assuming a traditional sale, pay all real estate commissions, closing costs, title fees, escrow fees, clear those obligations, and move away. You'd probably still have money in your pocket to put used towards rent, a down payment, first and last month security deposit, something like that. Right. So that means that there's 13% of those homes, right, that might not have an option to sell. There might not have that luxury of having enough equity that they can go ahead and sell. So 13% of 1.86 million is 241,800. Again, big number overall. But I need to put that in perspective for you, because in every market, good, bad, indifferent, there's always foreclosures. There are always homes that are foreclosed on every single year, regardless of what the market's doing. So, as an example, in 2017, 314,220 homes were foreclosed on. In 2018, 279,000 homes were foreclosed on. In 2019, 277,520 homes were foreclosed on. Again, of those homes really in trouble, we're looking at 241,800. So below the number of foreclosures that we saw in 2017, 18, and 19. And that's assuming that all of those homes went to foreclosure, which they won't. right? So number three, the current housing market can absorb whatever homes happen to come onto the market through foreclosure. See, this is a big, big difference between 2007 and 2008 compared to now. When you go back to 2008 and you look nationally, there was a 9-month supply of homes for sale. A balanced market is considered 6 months. If you look at the national inventory right now, it's right just below 3 months. Sorry, it's right below 3 months worth of inventory. Here in North Texas, we're less than a month. Right, Southern California, where we're also operate, again, it's right around a month. Okay, so those homes, if they do come onto the market, they'll be coming onto a market that's starving for inventory. I mean, ask anyone that's been shopping for a home. There's just not enough homes for sale. So again, it's not the same thing at all. And even if those homes were to make it to market, they would quickly be snapped up by the buyer demand that we have currently. So number four, lastly, on why we're not going to see a wave of foreclosures, the powers that be, so to speak, don't want foreclosures to come to the market. So the government and the banks and the mortgage industry or the lenders, they're going to do whatever they can to not let that happen. So if we go back to the housing crash, is foreclosures were dominant. Okay. I was doing foreclosure listings for banks at that time, and it was new property assignment, new property assignment, new property assignment constantly. That started to slow down as short sales came about. Well, why did short sales come about? Well, the big difference is the bank never had to take ownership of the house back in a short sale. They just had to approve the sale. So they didn't have all the liability that is involved and all, or the expense of a formal foreclosure and owning the house and having to fix it, then having to resell it. They're not in that business. The banks are not in the business of foreclosing on property and owning property. They want to make loans for property. That's what they do. And so everybody learned their lesson last time around. So no one in the government and no one in the lending industry wants to get those properties back. As a matter of fact, the White House announced some information last week that homeowners that have a government-backed loan, so Fannie Mae, Freddie Mac, such as that FHA, VA, they are working on options right now to where they're going to do everything they can to enable them to stay in their home, right, and work something out. So you've got this big initiative not to let the foreclosures happen, number one, and number two, you've also got the numbers are nowhere near as stark and or overwhelming as it was thought or presumed they were going to be. A bottom line. So, again, someone I quote quite often is Ivy Zellman. She's the founder of Zellman and Associates, which is a major analytical housing firm. So housing market analytics. And as she said, the likelihood of us having a foreclosure crisis again is about 0%. So, if you're one of those people who've been sitting, waiting, thinking that all of this inventory was going to come on the market to force these home prices down to create a good opportunity to buy, it just doesn't look like it's going to happen. So I'm going to put a link directly below this video to last week's video that really talked about that and what the projections are for housing all the way through 2026. So make sure that you give that a look at. And as always, if you have any questions, please don't hesitate to reach out. I'm happy to help you however I can.